What comes to mind when you think of international financial architecture? Sounds confusing, right? It's actually very simple. This video will break down the components of international financial architecture in a way that you will actually understand. Let's begin with the what. Picture a foundation for a house. Let's add a roof to that house. And finally, slide earth inside that house. Each pillar represents a different component of international financial architecture. The first is the World Bank. The second, the International Monetary Fund. The third are regional banks, and the fourth is G20. Don't worry if you don't understand what these are, we'll explain them later. These four pillars represent the framework that is international financial architecture. To begin, let's take a quick look at the history of these foundations. Before the end of World War II, it became clear to the world that individual nations' economies were connected. Therefore, to avoid another financial mess like the Great Depression, these economies would need to coordinate together. In July of 1944, 44 countries came together to discuss this coordination in Bretton Woods, New Hampshire. This meeting created the World Bank, get it, World Bank, the IMF to help tie different currencies together, and set the US dollar as the world standard.
The World Bank is the most well-known component of international financial architecture. We already mentioned it is one of the Bretton Woods institutions. Remember those old white men sitting around a table? The World Bank Group has 5 different parts. The first is the International Bank of Reconstruction and Development, or more easily referred to as IBRD. When most people think of the World Bank, this is the component that comes to mind because they provide the loans to projects in middle-income countries. The second branch is the International Finance Corporation, also known as the IFC, not the Independent Film Channel. This branch is the most lucrative of the 5, focusing on attracting private funding for development projects. The third is the Multilateral Investment Guarantee Agency. I know, these long names are starting to get annoying. And guess what? This is known as MIGA. This arm of the World Bank provides insurance to investors so they feel secure in investing in developing countries. The fourth is the IDA, the International Development Association, which is the part of the bank that loans to low-income countries. Places like Haiti, Nigeria, Cambodia, and the Solomon Islands. The final part of the World Bank Group is the ICST, which stands for the International Center for Settlement of Investment Disputes, which is a long way of saying that it's a court system that settles financial disputes between countries. So while there are 5 distinct parts of the World Bank Group, we are most often discussing the IBRD, or the International Bank of Reconstruction and Development, when we say World Bank. Their basic function is to provide assistance for poverty alleviation and country development by providing loans. Our second pillar, the International Monetary Fund, also came out of the Bretton Woods meetings. Their original function was to monitor currencies and ensure everything was running smoothly after all the international currencies were tied to the dollar. It performed this job until 1973, when the U.S. moved off the gold standard and the system became one of free-floating currencies. So what does the IMF do now? Well, it collects and analyzes data on nations' economic policies and then shares this data with other member countries so that coordination is possible. It also provides small loans to countries in need.
Remember this house? The Bretton Woods institutions aren't the only international financial institutions involved. There are also many regional banks that play a role and represents our third pillar in our house. The first is the African Development Bank. There's also the Asian Development Bank, the Inter-American Development Bank, and the European Bank. These were all started in the 1950s and 60s as these areas became independent colonial powers. They are all independent institutions but mirror the World Bank almost entirely with their policies.
So, to review, what do all these big international financial institutions, like the World Bank, the IMF, and those regional banks do exactly? They're big actors in the globe. These big public institutions lend a lot of money to developing countries and have a large influence over governments. So if all they do is lend money for development projects and have some influence, what's the big deal? Why the bad rap? Consider in the 1990s when the World Bank used its financial power to pressure the government of Mozambique to liberalize trade for its largest cash crop, cashews, in order to get a loan from the bank. Farmers lost government support and were forced to sell their cashews in the international market. The result was a much lower price for their crops, And over time, the cashew industry was crushed, and government revenue plummeted. The government had no choice but to adhere to this policy or be cut off from much-needed finance from the bank. But hey, not everything the World Bank does is bad. Recently, the World Bank has promoted environmentally friendly and sustainable projects. And when an actor as big as the World Bank makes moves like this and sets standards, the whole world listens. But the banks aren't the only ones involved. So you've probably heard of the G20 and the G8. These are groups of the 20 or 8 largest economies in the world that regularly meet to discuss the issues facing the world economy. This means our financial minister, currently Secretary of the Treasury Timothy Geithner, and sometimes our president get together with other ministers and presidents from other wealthy countries to talk about what they think the big economic issues are. So what's so bad about leaders getting together to discuss global challenges and enacting change? Well, the problem is that there are way more than 20 or 8 countries in the world, and these forums have been accused of being an overly exclusive club.
So, just to review, let's bring back the house we showed you earlier. Here are the 4 pillars: the IMF, regional banks, G20, G8, and World Bank. But what about you? Where do you fit into all this? We play an important role too. We provide the funding for these large institutions, and they should represent our interests.
Since the 1990s, activist groups and nonprofits have been monitoring and speaking out against these large international financial institutions. While this movement has petered out since then, we still have a role to play, and we have the power to pressure our G20 representatives to act on our behalf to create a more transparent, legitimate, and just international financial system.
Who do you think should be governing these institutions? What should their policies be? How are they accountable to governments both in developed and developing world? Watch this video as a great start. The more we know about these large systems, the better we can engage with them.